Alan Neckman of Agora Financial joins us now for the weekly options alert. Let's get your trader take on this market, Alan.
All right, so stocks lost last week, so the streak was over after 3 consecutive up weeks. But we did make a new swing high in the S&P, so that's very much positive. We want to see that happen every week.
You had a number of plays on for September. You had some winners out there. Tell us about those.
Yeah, so the September positions went off the board. So we exited the 3 trades we had left. We had a winner, we had a loser, and then we had a break even. So not bad overall, but we did have some plays that we took profits on during the course of the month, I think in Micron and Twitter and so forth. So overall, happy with the performance.
Let's get to October and talk about your trade tracker here.
That's the one thing we have is time. Most people in their lives, they can't get enough time, but in the options world, you can buy it. So we have October options. We've got Starbucks, Facebook, which keeps pivoting around that 190, which is the breakout level. Let's see if we can push, and Hewlett Packard. So we've got some time. Let's see what happens with those stocks.
And then you have some options trades on for the month of November.
Right, about 6 weeks of time there. Exxon, so we'll see what happens with oil, if there's some follow through above the 60 level. AMD, which is stuck around this 30, so still plenty of time for some development there.
And then in December.
December, a long time, almost the holidays. FireEye, 14 is an interesting level, a solid push above that. Once again, could send it to 15. But what we want to do is watch the macro market for another March, and it's nice to see the market stall and steady because that usually means consolidation before another big move.
You are playing the small caps. You say you have a small cap attack on IWM, which is really just tracking the Russell 2000. What's the plan, Stan?
So the Russell 2000 is an index that's been left behind, forgotten about. Now it's been down about 10% in the last 52 weeks, trading between 150 and 160 since February. So that targets 170. Now 170 is still below the high from last August. So there's a lot of upside when the money flows start going in there, and that's what our indicator is seeing right now. We'll see a small cap snap back. Going in with a November 150 call, so like I said, 150 is a very strong support base. Got some time, and let's see if the money flows can get this going once again.
As we take a look at your trading floor takeaways, a lot of people talking about...
Don't say it.
Impeachment.
No, we're not going to say it. We're talking about price, not politics. That's important. So the S&P was 0.75% from the all-time forever highs yesterday before some news came out. So we're not that far off the records.
All right, moving on to rate recoil. This is interesting.
We're seeing the 10-year note yield continue to decline once again. Now, remember we had that sharp drop, a little bit of a bounce, but the overall trend, obviously, for rates continues to go lower and lower and lower, making stocks that much better and better and better.
And then dollar stall.
The dollar, you're not seeing a flight to quality, even with this new level of instability, that word that you just mentioned. So the dollar index has been trading in a 1-point range for nearly a month. So we have not made new highs again, which shows that maybe the bottom is in for foreign currencies.
We'll see what happens there. Thank you so much.
Thank you.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.